Okay, hi everyone, Daryl here. So this is lesson 27 in my YouTube playlist, Investing 101 playlist, and today's topic is going to be correction. So generally what is a correction? It is defined as a 10% decline in the price of an asset, and the asset could be like equities on the stock market, it could be index funds, or it could be property markets. So for example, maybe you would like to trade Apple on the New York Stock Exchange and the Apple stock. So if let's say Apple stock is about maybe about 180 US dollars currently, and let's say it drops by about $18, so it drops down to about 162. So that would define as a correction. Uh, and let's say like for property markets, right, there are price indexes. I've actually gone through what a price index is. And if you follow the price index, then if let's say the property market dropped by 10%, then that is generally defined as a correction in the property market. Okay, so corrections are difficult to predict, and if anyone can predict them, then generally they are not truthful because it's very difficult to predict the exact time of a correction. Uh, Even the most intelligent minds also, or the stock traders also don't know when the market will correct. But generally, there are indicators to see when corrections may occur. Okay, so there are many reasons behind the correction, and the reasons are vast and wide. And for even in some cases, right, people may just think that markets are overbought, so they will just start to sell. So it can be just a human realization that the prices are too high, then they just sell, and that can start a correction. Okay, so corrections can last from days to months or even longer. So in the long run, right, correction can be healthy because they actually adjust overvalued asset prices in a good way, and then they provide buying opportunities to people who may think that the asset prices are too high, so they're waiting for a pullback, and the correction can be an entry point for them. Okay, so what are the pros and cons of correction? Okay, so the pros are it creates buying opportunities like I mentioned before. So if you're looking to purchase a property and then you think the property price is too high, then you wait for a correction and then you enter. So that's why some people say, oh, I'm waiting for a correction of like what 40%. Okay, that's not a correction, that's a crash. Okay, so a correction is 10% uh, lowering of prices, and then that determines as a correction. So it also comes over inflated markets. There are cases whereby prices just keep moving higher and higher, and then yeah, people will just buy because they they need to buy now because tomorrow they think that the price will become higher. So the idea that I'm buying just because today is cheaper than tomorrow is actually the wrong mantra of why you should actually purchase an asset. The the fundamentals should come before the fact that you want to buy before the price rise. Okay, so that's overinflated markets, and when a correction comes, right, if you put in place proper risk management, you can actually mitigate losses. So I'll be talking about stop loss and all this at a later YouTube video. Okay, so cons, right, is that it may create panic, which may result in an oversold situation. Okay, human beings are like that. When the market is doing very well, people will think that I need to buy now. If not, then I may miss the boat. Then they overinflate the market. Then when the market is doing badly and there's a correction, right, then some people will say it will go even lower, so I don't buy. And then it exacerbates the problem, and then after that, it gets worse. So that means that the prices may fall past what is fundamentally sound. Okay, so it's actually damaging to speculators. Well, this may be a debatable con because speculators are actually too many speculators in the market is not too healthy as well. So it's damaging to speculators. So people who are in the market for short-term gains, right? When they correct, and if let's say they are maybe borrowing money to purchase this particular asset, then they may be in deep trouble because their losses will be multiplied. Okay, and then all recessions start from a correction. That means a fall in asset prices. Then the fall starts to take on a life of its own, and then it becomes more and more severe, and then eventually there comes a recession. So the cons are that if the correction is too prolonged, most probably it will start a recession. Okay, and that's not good for everyone. Okay, so we want a healthy market. That's why once in a while, prices will dip by about 10 odd percent. That's a correction. Okay, so that's all from me for this particular topic. I'll see you at the next video.